Hello everyone, my name is TJ Lovelock. I'm a stockbroker market analyst with Kinetic Securities. My phone number is 1300 664 045 and email address t.lovelock@kineticsecurities.com.au. Here is our disclaimer. You can choose to read it now or it will be shown again at the conclusion of today's presentation. Today's presentation is titled the S&P ASX 200 Tracking Fund. Before we get started today, let's look at why you should consider ETFs. In 2008, State Street Global surveyed 840 investment professionals. 67% identified ETFs to be the most innovative investment vehicle of the last 2 decades. A further 60% reported that ETFs have fundamentally changed the way they construct investment portfolios. Let's now look at why investment professionals consider ETFs to be the most innovative investment vehicle. The steps in this presentation will firstly to be explain what the S&P ASX 200 Tracking Fund is, look at who should invest in STW, the benefits of an ETF investment, and then look at option strategy implications. The SPDR S&P ASX 200 Fund is an exchange-traded fund. The easiest way to understand ETFs is to consider a managed fund. Except ETFs have very low management fees and they trade through the stock exchanges any normal stock such as BHP would. You can have ETFs over indexes, currencies and commodities, and these ETFs are already available to Australian investors. However, it's index tracking ETFs which are by far the most popular amongst global investors. When you buy a share in STW, in one trade you have essentially invested in all of the underlying shares of the S&P ASX 200 index. These are Australia's best companies by market capitalisation and liquidity. The SPDR S&P ASX 200 Fund is listed on the Australian Stock Exchange and trades under the code STW. The SPDR S&P ASX 200 Fund is designed for investors with a long-term investment horizon. These investors typically want a diversified portfolio of Australian shares without the cost associated with managed funds. Secondly, institutional and fund managers look to STW as a core component of their portfolios which provides the same benefits as stock ownership such as dividends and franking credits. Overseas investors also look to STW as a convenient way to buy a basket of Australian stocks in one easy transaction. Let's now look at the benefits of an ETF investment. The main benefit is the diversification properties of the fund. By investing in the whole S&P ASX 200 index, you have essentially invested your capital across 200 companies. By doing so, you're diversified away all your company-specific risk. This means individual company announcements such as capital raisings, earnings disappointments, mergers and acquisitions will no longer affect you. Unlike other managed investments, ETFs are low cost. The SPDR ASX 200 Exchange Traded Fund only has a management fee of 0.29% per year. This provides investors with a cost-efficient way of getting a diversified exposure to the stock market in one easy trade. A major advantage of STW over other managed investments is that they are exchange traded. This means you can buy and sell that investment throughout the trading day, just the same as you do on any other stock. Market makers are employed to ensure liquidity is in the market so you can get in and out of the investment when you choose. Just like a normal stock investment, ETFs pay dividends, except they're not called dividends, they're called distributions. ETFs collect the dividend payments by the underlying constituents and pay these back to their holders on a biannually basis. The payments of the dividends include franking credits, which increases the tax effectiveness of the fund. One of the disadvantages or risks we discovered when investigating selling options to derive income from the stock market was the potential for the stock to have an abnormal move. These abnormal moves are often associated with company announcements. Well, as we have investigated, the SPDR S&P ASX 200 fund is a diversified portfolio of assets. This means that these company announcements no longer affect you as much as doing option trades on a direct share investment. Did you know that Kinetic Securities was the first stockbroking firm to trade call and put options on STW? By trading call and put options on STW, you can do away with the unexpected abnormal price movements which are a common characteristics of most stocks. Well, thank you for listening today. That's all I have for you on ETFs. I hope you learnt something about exchange traded funds and the benefits they have for option traders.